Yo, what is good, guys? Let's go over the trade that I took last Thursday, which unfortunately, camera going, interesting, which unfortunately was a loss, and I found out that it was like completely my fault. So what I saw was that the S&P before market opened was at all-time highs, and I highlighted this drawn liquidity right here, which was all-time highs, and we swept that before market opened, and then we went more up during market opened. Actually, no. Yeah, we were up on it before market opened. And on the NASDAQ, as you can see right here, yeah, this one right here, this market open right here, we were not close to these highs, not even close. So this right here already, it's a huge bearish SMT, which I also highlighted. But then at the end, I ended up taking a long. And I was stupid about it because high time frame SMTs hold a lot of power in these market, especially indexes. So this was completely my fault, but let's go over the analysis for this trade. So I highlighted this hourly drawn liquidity right here and this 1 hour fair value gap. So we swept liquidity, came down to this fair value gap. We had no bullish SMT created either on NASDAQ or S&P. And yeah, we just went up, fill this gap, okay, price a little bit choppy up here. And then I saw this break of structure right here, along with this fair value gap, and then a good reaction of this fair value gap, and that's where I entered right here. And as you can see, price just dipped lower and lower, and then, yeah, continued lower. And this was given from like the bearish SMT that we had, that I literally highlighted minutes before market opened. And I was like, okay, probably we're going to be bearish. But then I saw this huge candle down, taking out liquidity and filling in these gaps. I was like, camera going off again. Crazy. I was like, maybe, just maybe, price wants to go up again. And we were still highly bullish. So that was one of the things that caught me off guard. And yeah, I'm finding like more and more, like learning these markets, and it's so interesting how SMTs hold like a really strong bias on the trades that I take. Because if we look, for example, at today, I didn't take a trade because I couldn't see anything from the market. But let's go over today's price action. So at market open right here, I highlighted this drawn liquidity with these purple lines, just because I didn't want to get confused with these drawings. And then this liquidity and this liquidity, 1 hour and 4 hour. So, and on the NASDAQ, same thing, hourly drawn liquidity right here, and up here. And as we can see, as market opened, NASDAQ went all the way up here, swept these 4 hour highs, and went lots up on them. And we created an SMT because the NASDAQ swept these highs, whereas the S&P didn't sweep these 4 hour highs. So that was a clean bearish SMT. So after the SMT, I was looking for shorts. And price had moved up, only up since market opened. So I was like, okay, there's sell side liquidity that has to be taken. So we broke structure in the 1 minute. I highlighted this fair value gap right here. A bunch of fair value gaps getting formed, nothing to enter off of. And then the only possible entry that I could have had was this up candle filling in this tiny 1 minute fair value gap and then shorting off of the reaction with like a stop like right here. I need to fix this. And yeah, that was probably my only possible entry with a great with a great trade to be taken, but yeah, I didn't really saw the opportunity of it. And then my bias for today was not even being bearish, it was taking longs. So the SMT really hold a bias for this if I had taken the trade. But then again, if we scale down and wanted to look for longs, we could have seen this. Boom. SMT right here on the NASDAQ. This is a bullish SMT. NASDAQ not sweeping these lows and not sweeping these draws on liquidity, whereas the S&P did for both of them. So that's a bullish SMT right here. And it's so easy to spot them as well because price hasn't been moving like that badly the last few days. So like we could just scale down either on the NASDAQ or the S&P. I would say the S&P just because it went lower and has more room to the upside. But simply SMT, then we see break of structure to the upsides, and then this huge fair value gap with this candle dipping inside of it, and then a closure above it. And that's boom, stop loss right here. And then I would go on and target maybe the start of this fair value gap, and that's already a like, or this end of a 15-minute fair value gap, but I would simply put it right here at these lows swept previously. But yeah, that's already a 2% gain off of this, and it's just simply by having a bias and having an SMT and scaling down to lower time frames to find an entry. So SMTs, again, SMTs have been really working a lot, and I found myself spotting them very easily in the markets. So that's a good thing. And yeah, I'll be looking forward to taking only trades with SMTs included, at least on the indexes, not on GU. And yeah, that's it for today. Catch you in the next one.